Hello and welcome to another mining podcast with me, Paul Harris, and Joe Mazumdar. Hello, Joe. How are you?
Happy New Year, Paul. How's it going?
Happy New Year, Joe. Very well. Today we're talking about lithium. Lithium has been on a tear. There's been a lot of M&A activity. It's a product that's very much in the headlines, not just in the mining sector, but in the sort of broader business media. And today we have the great pleasure to be joined by a specialist, Murray Brooker from Australia, a lithium consultant and QP. Hello, Murray.
Hi, Paul. How are you?
Very well, thank you. To start with, Murray, why don't you tell us a little bit about yourself? Who are you and what do you do?
Okay. Well, basically, I'm a geologist and hydrogeologist that specialises in lithium salt lakes. So basically, I figure out where to go looking for lithium and what drilling is required, and then I define resources and ultimately reserves, so we can get lithium to people's hands and put it into cars and phones.
Well, thank you very much. As I mentioned in the introduction, lithium prices have been on a tear. Lithium prices were on a tear back in 2018, and that fizzled out. So why are prices on a tear now, and how is this time different from last time?
Effectively, what's happened now is that the demand is catching up with supply, and so we have this shortfall in supply, and beyond that, we have people realizing that they really need to lock in contracts and supply for the longer term. So there's somewhat of a catch up going on, and desperation to basically lock down supply before it's not available. So that's really contributing to push prices up very strongly at the moment. And it's something that we knew was going to play out, but the timing of it playing out was never clear, and a lot of people were standing on the sidelines, and now they're really desperately having to rush in and act, and so that's all contributing to this very rapid increase in pricing and investor demand.
Thank
So
you.
do you think there's still more room on the pricing?
Yeah, the pricing is increased, very significantly. Really kicking off about November last year. There was November 2020. There was a turnaround in interest, and since then we've sort of seen rapid revaluation of companies, and also the product pricing has been increasing significantly.
So
And
presumably,
also, sorry,
carry on.
just the underlying that we've seen besides the pricing is the M&A activity. And so can you go into a bit of that? Like we've seen, like one thing I've been looking at is exploration expenditures. And one thing that, stood out to me is how much exploration expenditures are being directed to Argentina, and the proportion that's actually being directed to lithium in Northwest Argentina in terms of the brines. So in terms of the M&A, we've seen Argentina being a focus, and we've also seen the Chinese being a major suitor. Is that a trend that we're going to see continue?
Yeah, absolutely, Joe. I mean, with regards to the projects and investment and M&A, it's a case of these projects have been around for quite some time now. People have known which are the better projects and the bigger ones, but people have been cautious about the market outlook. And as that sort of firmed up, and as people have come in with longer term view, the M&A project activity is sort of eventuated. I mean, what we see is that the Chinese companies in particular have a longer term focus. They know there's a massive electrification going on, and so they've been prepared to invest in projects, particularly in Argentina, earlier than other players. And so what we've seen is that they've just picked off these projects when other investors have been reticent to put the cash there. So we've seen Xinjiang buy into the 3Q project, and then we've seen a lot of activity around the Millennial project in Pastos Grandes, with eventually Lithium Americas taking that out. There's a whole lot of speculation as to whether that's really funded by Ganfeng at the end of the day. And Ganfeng have been a very focused and committed player, and really have developed their presence very strongly in Argentina and the rest of the world. So they've really taken a long-term view, and I think they'll really be rewarded because they've got in there, they've bought into these projects, they're gonna develop them, so they'll have a massive supply pipeline. And the M&A is just going to continue, but I think what we've seen Rio Tinto now just recently buy Rincon, which perhaps was a surprise to many people, with a non-traditional lithium player. We'll probably see more of that sort of thing, but really, at least in Argentina, the real elephants are sort of now almost all in the hands of major companies and the ultimate developers. So we're going to see a lot of tussling over the remaining projects, and that's going to be very interesting to watch.
Thank you, Murray. Now, those recent transactions you mentioned, have been for lithium brine projects. A couple of years ago, there was a flurry of M&A for spodumene projects, particularly in Australia. Why is the M&A action moved from spodumene to brine?
Well, I think that's driven by a number of things. I mean, one of them is the advantages of the lithium brine projects, and the fact that they're supplying lithium carbonate, which is no longer the lesser desirable of the lithium products, and it has a better ESG credentials. But at the same time, we're seeing a lot of activity here in Australia for hard rock spodumene. There's an enormous amount of press on a daily basis around someone doing a deal to get into a project which has got some pegmatites on it. The company prices are flying sky high, and so there's also a lot of activity around spodumene, even though we saw massive amount of spodumene development going back about 3 years, and that's what drove the market into the price decline, because there was this massive increase in supply. Now that's there, but that's being absorbed. So we're now looking at sort of growing the next generation of Australian lithium projects, and that'll take a while, and so any future supply coming out of those is going to be some way off.
So just getting back to what you were saying about lithium carbonate coming back and hence brines coming back, like when I met you last, I think it was in Northwest Argentina several years ago, looking at lithium projects at the last price spike. But then there was a transition to lithium hydroxide, which like you said, spodumene works better to generate. And also, I believe Orocobre built a plant in Japan to actually convert some of their lithium carbonate into lithium hydroxide. But now you're saying lithium carbonate isn't such like a price discount. So what's driving that demand for lithium carbonate now, such that it's looking as good or better than lithium hydroxide?
Well, what was happening was that the investment markets were really trying to pick the winner in the battery space, and in terms of energy intensity and things, the nickel battery base was really favoured in that sense. But as battery technology has got better, what we've seen is that the LFP batteries, which are effectively being produced with lithium carbonate feedstock, have become very strong players, if not the dominant player in China. And so effectively that's been underpinning the demand for lithium carbonate. And so if we go back those couple of years, Joe, we saw a lot of analysts taking the view that, actually lithium hydroxide is going to be the most desirable product, and that's coming out of hard rock projects. So we really want to be in hard rock projects, despite the fact that they were the higher OPEX projects. But more recently, as I say, the pendulum's kind of swung back a bit towards carbonate, and so that's really supporting lithium carbonate production in the future and pricing.
So in terms of brine projects, I mean, like in terms of exploration for anything, we're looking undercover, and we don't really know what's there until we drill it. But the brines, the salars that host the brines are basically pretty obvious. So is some of this just a land grab, getting as many of the salars in places that you think you can extract? Because I know Chile has some issues with brines and lithium production. Argentina seems to be better. Is just picking up anything in Northwest Argentina the go, and then is Bolivia ever going to come into play?
Yeah, I mean, as you said, the nice thing about salt lakes is that you can see them from 30,000 feet, and so then it's really a matter of seeing how they deliver, and not all salt lakes are equal, of course. So some of them have substantially higher lithium concentrations naturally than others, and lithium is a little bit like a high value bulk commodity in the sense that, like a lot of other things, it's also the impurities that are important, particularly in the traditional evaporation pond treatment method. So we've always been concerned about magnesium, boron, calcium. We need to get that stuff out for the final product, and magnesium in particular has been something that is one of the key impurities to remove. Now that's and so higher magnesium to lithium ratios have traditionally been regarded as a sort of negative attribute from processing point of view, and adding to the cost. And really the view has kind of been that if you got magnesium to lithium above 10 in terms of a ratio, then the economics are not really going to work. Now what we see in the fast developing technology world is that lithium extraction technologies, or direct extraction, can effectively get around the issue of relative impurity concentrations, and so direct lithium extraction is kind of the holy grail for the industry in terms of opening up new frontiers with salt lakes that previously weren't amenable. And there's an enormous amount of work going on, and I've lost track of how many processes are in development for direct lithium extraction. But there's a lot of work happening there, and what we shouldn't lose sight of is that people have actually been using direct lithium extraction techniques for sort of over 20 years. I mean, Livent in Argentina uses a process where effectively they are extracting lithium in a way that it's a direct lithium extraction technology, and so there are technologies out there that have proven to be viable, and we're going to see a lot more of it, and so there's still a question as to which of these technologies are really going to be the winners, and of course there'll be more than one, but we'll see a lot of the new generation of projects being based around direct extraction technology, and that's where companies like Lake Resources interacting with Lilac Technologies are sort of interesting space to watch, because that's really where a lot of new generation projects are heading.
But just a question. Sorry, Paul. Just could you explain the difference between how it's done now with respect to the ponds and the evaporation versus direct extraction, and how direct extraction eliminates the contaminants, the things you want to avoid, like magnesium?
Yeah, sure. I mean, the the traditional pond method effectively involves constructing square kilometres of ponds. For a typical project size of, say, 20,000 tonnes of lithium carbonate, there's probably in the order of $100 million worth of expenditure in the ponds and the liner. And the liner is basically a special HDPE product, which is there to prevent leakage from the ponds. It's expensive to buy and install, and that's a pretty significant part of the pond construction, although there's a lot of civil works that go on there. So those ponds are a chunk of capex that can be reduced significantly with the direct extraction. I mean, often you'll still need ponds with direct extraction. Some people, the plan is to evaporate the salt, and so they still need ponds, but they don't need to be lined. Other players are looking at re-injecting the spent brine after the processing plant and stripping out the lithium, and so that's another option which removes the pond requirement almost entirely, but involves having re-injection wells. So those are kind of the options there. And the process plant, there's really about 3 different types of direct extraction methodology. But effectively what it means is that you're pumping your brine into a plant. It's going through a lot of big tanks and absorption columns or selective membranes or some sort of solvent extraction system. And then you pump your spent brine out the back of the plant, dispose of that, and the lithium is captured on particular medium, which often you'll have to wash the lithium off, and then you have much more concentrated lithium that's then subsequently upgraded, and you produce your final lithium product. So people talk about the 18-month period from in a traditional operation of pumping brine into a pond, evaporating it and putting it into the plant versus the direct extraction, which is on the order of let's say 12 hours. But people make a big deal of that, but really that 18 months is built into the construction timeframe of the project. So you build your ponds first, build your wells first, then you're building the processing plant, and so that 18 months is kind of absorbed in the construction phase of the project. So it really doesn't make any difference in terms of timing, but people will talk about that a lot.
Oh, because you have to build the plant anyway.
Yeah, that's right. You've got to build a plant anyway. So it's all about scheduling to get the brine to the plant before the plant, when the plant's ready to operate.
Okay. As we've mentioned, sort of prices for lithium are at sort of record highs. Are they forecast to stay at these levels? Are we at the sort of new baseline, or are they forecast to fall at some point in the future? And I guess the reason I ask there is because at higher prices, projects with more or a greater abundance of impurities, can be viable if extracting impurities is often just a cost at the end of the day.
That's right. I mean, what we're seeing is that the price is up. The price forecasters are saying, okay, well, the price is going to stay up for in the future. So we're going to have a higher, consistent long-term pricing. Although of course there'll be ups and downs, and so the market demand is continuing to grow, and so new project development is going to be in tandem with that to meet the demand. And what we've seen in the past is when there's been a slackening off of interest in the sector and lack of investment coming in, that results in a greater lag time for the next development, and so that has an impact on prices. And so the period where we've seen less interest in lithium prior to sort of November 2020, that sort of lag period of investment is is going to have had a downstream effect in terms of slowing down lithium development. So that'll all contribute to keeping the price high in the future.
So, like the cure for higher prices is higher prices. And I guess the question is, lithium is not that rare. There's a lot of lithium around. The issue is getting it into the product that battery manufacturers need. But do you see it in a period of higher consistent lithium prices that we might have an issue where something huge comes on and occupies that demand shortfall and gives us a glut in the market? Do you see that being a potential risk or not?
No, not any. I don't see that anytime soon, Joe. I mean, there's some monsters out there, as we know. There's the AVG project in the DRC, but that's not producing right now, and these projects always take a while to ramp up. So what this is all stimulating is more activity in spodumene in Western Australia and Canada, where we kind of thought that was all over. We were seeing a new generation happening there. Of course, we've still got projects like Bacanora to come on and produce lithium from clays. We've got the Nevada lithium clay projects, things like the Ioneer project up in I think Nevada, where we've got lithium in volcanic ash units, and so there's a lot of other projects that are out there and can find their way to market, particularly if the prices stay high and they can cover high OPEX on production.
Okay. So I guess the starts and stops of the lithium market, I guess, can we summary and say that's ended right now, and this is the beginning of the need for lithium to feed that electric vehicle battery? Are we now well on our way? Is that what you think?
Yeah, look, I mean, I've been in the lithium game for quite a while now, and I think we've seen at least 5 sort of major price cycles in terms of stock markets, at least in investor interest and reward. On the back of the COP26 meeting and the sort of general green economy becoming mainstream, we've just seen this big increase in interest in the sector and everything related to effectively cleaner power generation and batteries along with that. So I think it's now we're sort of in the process of going mainstream, and I think we may have hit the tipping point in terms of that. So there's been a few false dawns with lithium, that's for sure. But my reading is that this time it's for real. We've sort of got the momentum we need.
So, final question for me is that, with all this M&A, what would you say, like I'm trying to figure out, is anything going to be taken out now, or are there characteristics that you think make a project more likely to be taken out, like whether it's size, location, chemistry, like what sort of things, attributes do you look at to say, oh, that's a project that can happen, that's a project that's not going to happen, even if the price changes?
Yeah, I mean, certainly size is a consideration, and we've sort of seen the elephant being gobbled up by the eventual developers, certainly in Argentina recently, and going back a couple of years in Western Australia as well. So that's a key consideration, and also OPEX and CapEx. There's going to be an interesting transition in terms of traditional processing technology for brine to direct extraction, and how people will be assessing that and backing that. But I think people will be just backing it on its technical merits and detailed evaluation. We've seen that with Rincon, which has a direct extraction technology. So that I think that's less of an impediment than it used to be. Geography's been an interesting one. I mean, Argentina has really stolen the march on Chile and Bolivia, because there has been effectively the opportunity for exploration companies to get on and explore and develop. From what we've seen in both Chile and Bolivia is effectively politics get in the way of geology, and so that's had a really negative impact for development in both of those countries, because the politics has really prevented a lot of activity there, and some money's flowed to Argentina and Western Australia, and to some extent to Canada as a result.
Thank you. My final question for you, Murray, with the direct lithium extraction technology, is that something that in the future we may see retrofitted to existing operations, or because of its benefits of increasing production, not being such an issue with the impurities, etc., or is it because you've got this, companies have this sunk investment in the ponds, that they'll stick with that? Thank you very much.
A lot of companies in the current market will certainly be thinking about expanding operations and how they can fine tune things. So yes, I'd absolutely expect companies already in production to be looking at direct extraction as sort of a next phase of their development. So yeah, very, very much the case, and they're probably the ones that are going to be actually driving the construction and the implementation of some of these new technologies.
Excellent. Thank you very much, Mike. It's been a fascinating conversation. Thank you for sort of going into all the different ins and outs for us. That's all we've got time for on this edition of Another Mining Podcast. Murray Brooker, thank you very much. Joe Mazumdar, thank you very much.